Welcome to the Everything Financial Radio Show. This is the Legacy Radio Network. If you're a new listener, we are here every week. I am your host, Dennis Tubbergen, and I'm glad you're joining me today. Have a terrific show lined up for you this week. Professor Laurence Kotlikoff, economic advisor to two presidents, consultant to many of the world's central banks, will be joining us again today. Glad to have Professor Kotlikoff with us. We'll get his take on the banking crisis and listen to his very interesting and unique and, in my view, very viable solution. A very bright guy, and we'll be having Professor Kotlikoff join us in just a moment. Also, we'll talk about a poll that revealed more Americans want the government to leave them alone than lend them a hand. Are Republicans eyeing a return to the gold standard? I don't buy it, but we'll talk about it. Dr. Mark Faber, former guest on the Everything Financial Radio Show, says there is a 100% of the world going into a recession. We'll talk about China's economy and what happened in Camden, New Jersey as well this past week. You'll want to stay tuned for that. Quick reminder, if you've not attended one of our discovery groups in the last 6 months, you're welcome to go to personallegacyseminars.com and get more information. We talk about personal financial strategies for an economic winter environment. Personallegacyseminars.com is the website. Also, you can request our 2012 guide, Surviving a Market Crash, by going to investingapproach.com. That is investingapproach.com. I am very pleased to have back on the Everything Financial Radio Show with me today Professor Laurence Kotlikoff. Professor Kotlikoff has authored or co-authored well over a dozen books. Professor, very, very pleased to have you back on the program today.
Thanks for having me, Dennis. Appreciate it.
Professor, let's talk a bit about what's going on in Europe. I noticed that the Chancellor of Germany this week now, I believe the headline of the article was United States of Europe with a question mark. Are they now trying after the fact to get some type of political unity to follow the fiscal unity, and does this have any chance at all of working?
Well, you know, the only way this is going to work is if Germans start collecting taxes of the Greeks. You know, you have to send German tax collectors down to sit on top of the Greeks. I don't see that working out too well. I think the Greeks will resent it. The Germans don't want to do it. So it's one thing to have a political union, but if you're going to actually have a strong central government, you have to have a centralized tax collection agency. Now, you know, it's possible it could work out that way, but will the Greeks sign up for it? Will the Italians? Because they know that some level for the Germans to stay in this game, they're going to have to do what the Germans want. So, you know, they're going to give up sovereignty in the process, and I guess I don't necessarily see that happening. I think there's a far simpler way for all this to work out, which is fixing the banking system so we don't have these crises in the future.
You know, fixing the banking system, certainly that's a comment that I like to follow up on because you have some interesting and very simple, viable solutions to the banking system. And certainly now our banking system, you know, the fractional reserve banking system is somewhat founded on debt. And then when you look at debt on debt with some of the derivatives and some of the issues that we're facing there, the banking system at this point, from my perspective, is a house of cards. Could you comment on the current state of the world banking system and what some of the solutions in your view might be?
Yeah, I would say it's unsafe at any speed. That's the nature of the current system. The reason Europe is such a drag on the world economy at this point is that everybody is concerned about bank runs taking place throughout southern Europe that could spread to the rest of Europe and even over to the U.S. and just lead to complete financial banking collapse throughout the world. And yes, governments could print money to cover all these deposits, but in the process it would generate hyperinflation. So the whole thing is not stable. You have to realize that the banks are running a market. They're not just like regular companies. They're doing something special, which is running the financial system. So what we need to do is keep the banks doing just that job, running the financial system and not gambling, basically taking in money, promising to pay it back, and then investing in things that are either ex ante risky or turn out ex post to be risky. So this proposal I have, which is called limited purpose banking, I wrote this book called Jimmy Stewart is Dead for any listener who wants to read about how I view the banking system and how to fix it. Anyway, limited purpose banking says you can't trust the bankers to do a good job here. The Jimmy Stewart banker, George Bailey, and It's a Wonderful Life, he's not with us anymore to take care of us, so we have to really have a banking system that can't fail. And the way you do that is to convert all the banks into mutual fund holding companies that are just issuing mutual funds that aren't, and those mutual funds would be what we call 100% equity finance. They wouldn't be borrowing any money. They would just take in money and then invest it in the securities that they're specialized in. So we know all about mutual funds. We have, Fidelity and Vanguard and T. Rowe Price. We're all using mutual funds through 401k plans, and that's the kind of banking system we need. Those equity finance mutual funds already constitute about 25% of all our financial intermediation. So if we could just make that glass 100% full rather than 25% full, we'll have no banking crisis ever again in the future.
Professor, how do we get from where we are today, assuming we got everybody to get on board with this solution, which certainly makes a lot of sense, how do you get from where you are today with banks holding sovereign debt that will likely never be paid, in my view,
right,
many world banks insolvent? How do we get from where we are to where we should be?
Well, let's take Europe. What would have to happen is you have to look at the banks and tell the creditors of the banks, probably those who are not the depositors, but those who have lent money to the banks by buying the bank's paper, by buying the bonds, look, you're going to take a haircut. Maybe it's 50 cents on the dollar or the euro. And you right off the bat mark the banks to market. You realize that there are assets. The banks in Europe have perhaps about 20 trillion in euros in assets, and those things might be worth 10 trillion. So you have to get the liabilities of the banks down to the value of the assets, and you do that by hitting up the creditors, making them take a hit. And now you've got the banks in a position where what they owe is equal to what they've got. And then what you do is you take the creditors and you say, we want you to convert your debt into equity. In other words, it's a debt-to-equity swap. So if you're holding a bond on you've got a bond on a bank like Deutsche Bank, it's a Deutsche Bank bond, you would have that converted into into shares of a mutual fund that's holding the assets, and that mutual fund would would buy up the long-term assets of Deutsche Bank. So this is just a debt-to-equity swap or conversion, and presto, within a very short space of time, probably within a few months, you could have no traditional banks operating at all in Europe. Everything would be mutual funds. All the same securities would be held through mutual funds. And then if a country like Italy had a default on its bonds, well, what would happen? The people that held shares of mutual funds that were investing in Italian government bonds, they would get hit. But the mutual fund itself would not fail. The mutual fund system would not fail. And life would go on. We wouldn't have any financial collapse. So we need to get the banks back to their legitimate purpose. That's why this is called limited purpose banking. We need to limit them to their purpose, which is financial intermediation. It's not borrowing, promising to do things they can't do, and then gambling with our money, taking a bath, and then leaving the taxpayer to pick up the pieces.
Professor, what you just described makes a lot of sense. Is there any policymaker or politician proposing this as a solution? Is this on the table?
Well, certainly there's a lot of prominent economists who've endorsed this. 5 Nobel laureates have endorsed it. Many very, very prominent economists who haven't received the Nobel Prize have endorsed it. There's George Shultz, the former Secretary of Treasury, has endorsed it. The current head of the Central Bank of England has mentioned the proposal several times in testimony to Parliament and to major speeches around the world. So there's actually fair amount of support, surprisingly strong support by people who've heard about this proposal. And I'm just trying to spread the word. The central bankers, I think Paul Volcker finds it intriguing. I've talked to him about it. I've talked to a lot of central bankers, and I'm doing more of that. So hopefully some country will come along and do this, because what's going on is is unsafe at any speed, as I said, and it could bring down, if what happens in Europe is that we see, which could happen even today, we could see people lining out to get their money out of the banks in Greece. That could spread like a fire, like a forest fire throughout southern Europe and into Germany and over to the U.S. We could have, just a massive run on all the banks around the world, because the banks have made promises they can't keep. They collectively made those promises they can't keep.
This is the Everything Financial Radio Show on the Legacy Radio Network. We will return and continue our conversation with Professor Laurence Kotlikoff after these words. Please stay with us.